Good morning, good afternoon, good evening, or good night. My name is Melvin, and you're watching Magelvin, where I'm going to talk about crypto trading. This is episode 2, and in episode 1, I've already talked about why you might want to start trading, and why crypto trading might be a good idea to start out on. I'm talked a little bit about how this interface works. I'll go a little bit into depth on that today. I talked a little bit about how you find your stocks, how you work with candles, and I taught you a little bit about the dangers and what you have to watch out for, and I'll keep doing this until I'm done making videos, probably. So, this video, I really want to talk a little bit about making yourself some indicators. And with indicators, I mean support and resistance lines. At the same time, I'm also going to introduce a new indicator, which I'm going to add directly. So I'm going to indicators. You have a long list of things, but at first, and the most interesting that I'm always keeping is the volume one. And I really like the volume one. On shorter time frames it's a little bit chaotic, but if I go to the day, then it gives me more information. First I'm going to talk about volume. So why do I add this indicator? Well, the volume tells me in the time frame how much, not exactly of course, but how much volume there was or is. And you can also see the current volume. As you can already see here, there's 107k, so that's for the time frame right now. And you cannot really see how big that candle is right now. Also automatic, thank you. I think I forgot to talk about that. If you go hover over here, this is the price range, of course, and this is the time. But you can see these two things in the bottom here is A and L, and A stands for automatic, fitting to the screen, and L stands for logarithmic. And usually, I think if you go in default settings, you get this, and this is linear. And linear sounds like a good idea, but it really inflates stuff that is high up, because people don't work with linear prices. They don't go from 100 to 110 or something, but they go in relative steps. So 5% down here, for example, if you want to go from 20 to 22, that's 10%. But if you want to go from 100 to 110, that's also 10%. And logarithmic scales take care of that. So if I want to go from 20 to 22, so this is 20 about here and 22 is about there. That's not that big of a range, but if I want to go from 100 to 110, it's exactly the same size range, like in the graph, which is really nice, because if you are here and you make 5% profit, then still your 100 euros will be 105 or dollars. And if you're here with $100 and you have 5% profit, then still your $100 will become 105. So it doesn't really depend what the price is, as long as you can take advantage of the profit or loss in percentage, and not particularly in the absolute price. So that's what people always put in on logarithmic, but yeah, it gives a little bit of an idea, and of course it exaggerates everything that has happened, because this looks very stable compared to here. Well, in reality, it is about as stable as everywhere is. So usually, and also in science, you also look at logarithmic returns, which are returns is basically the difference between the closing and the opening price within a candle. So that's called the return. And the return can also be negative, of course. The volume really tells you about how much of this on this market has been traded. So it's not only if it's green, that means that in total the candle is green, as you can see, but the volume can also be people who are selling to you. So it doesn't necessarily mean that all of this money that this represents is specifically meant for just buying in. But it gives an indication on relative volume of trading. As you can see, this small peak here is not very big, this peak, but you can see that there's a lot of volume. And I don't know what happened there, to be honest. But it must be something very exciting. because afterwards the volume went down a lot, and as you can see, when the volume goes down and the price is inflated, as you can see, it's very, very much higher than it was before, then usually it wants to recede very slowly, and that happens with a low volume. And whenever something rises, usually there's more volume, because a stagnant rise is way more interesting to people than a stagnant decrease. So yeah, it all has a lot of volume because, well, people like to make profit. People barely trade to see it go down. Of course, you want to always see stuff go up. That's how people work. So usually if it goes down, usually if it goes down like this, then there's usually low volume, and you can see that back. And so that's why I'm always here, because that can also, if this happens and there is a high volume, for example here, it goes down pretty stagnant like it did before, just a little bit less, a little bit more volatile than here, because this looks very like a line and this looks like jagged stuff. There's a lot of volume still. So there's as much volume as there is in the ascent as there is in the descent. Almost. It's going a little bit down, of course. So that shows that there's a lot of interest in the market right now. And that's why I'm always very curious in these kinds of things. So that's what I'm looking for, and that's why I use volume, because it gives an indication, like if it goes down very much, but there's not a lot of volume, then that usually means that people are just selling all of them. Like all of them are selling, and there's barely people buying at that moment. And usually that always gets like corrected. But yeah, I cannot really find a place where this happened a lot, because it's very rare that not a lot of volume will change the market a lot. Doesn't happen very often. So yeah, that's a little bit about volume. Now about support and resistance lines. So what I mean with that, and I'm going back to the 4 hours because it gives me a little bit more detail. So I zoomed out. This is the same graph as it was in day, but just divided in 6 candles for every day. And you might notice that some points, some price points are very interesting. So for example, this $80 mark, or maybe a little bit below, I'll put it at 79. It's very interesting because, well, this peak looked like it went down there, or up there, then went down, then went up again to this 79, then went down, then it went here. And yeah, this is a little bit harder to look at, but here you can see a little bit of resistance because this candle specifically has long wicks. And then you can see it go out like a lot. And that usually happens, like there's a line, and this will be here. It's called the resistance line. So yeah, it had a resistance at this price point, and then when it broke out and tested it a little bit, like, am I really gonna stay above? Then afterwards it will go up quite a lot. And that happens at a lot of price points. So yeah, don't overdraw. Watch out for that, because you can draw a lot of lines. But this one is a good one. And if I want to make a horizontal line, I can either go to this and then go to horizontal line. I usually do horizontal ray because a horizontal line does just infinite in both ways, and horizontal ray starts at a certain point, and I can just press and it makes a line. The same thing happens if I press Alt J, that makes the line at where my cursor is, and usually I do that. So if you think how the hell does he do that, it's Alt plus J. So yeah, I just made this line, and I keep it red because it's I keep it green now because it's now a support line. The price is above, so if it would go down, it could only use this as a support, and if it goes through, then it becomes resistance again. So this is now a support line, and as you can see, it went up a lot, blah blah blah, and it happened a lot, and then it went back down, and this one tried to get in the neighborhood of this line. If you place it like this, then you are like, oh wow, it didn't even reach it, so it's very bullish. But always keep in mind that you will draw your line like this, the other will draw your line like this, and it depends. So I keep it a little bit in the middle, and I just always have to keep in mind that yeah, it might be $1 higher or $1 lower in this sense. So yeah, if it goes down to here or it goes through like it does here, that doesn't really matter. So yeah, we can make a lot of these lines, of course. So I like to begin a little bit here as well, because I saw that it rose here, and then I see a couple of these candles here that are getting a little bit more stable for a little bit. And specifically, I also want to make that line because it tested once here, it tried to test here, it seemed to try to test here, it went through there, and it again tested there. So this looks a lot like a nice support line. But it seems a little bit less strong, but it seems a little bit less strong because these are two very nice peaks, and then it has a very nice touch here as well. Well, these are just the wicks of candles that are touching it, and only here it kind of tested it. So it is a little bit weaker. But I'll make it a little bit thinner, so I'll make it 1 pixel. Oh wait, I pressed the wrong one. This one I have to press. So now it's a little bit thinner, so I have a little bit of an indication of which are stronger, which aren't. But yeah, you can do the same for not only support lines, but you can also do it for resistance. So for example, the price is now kind of getting resisted over here. Is it an interesting price point? Well, it is, because, well, after this little wick here, it also went kind of stable or corrected here. And it went back a couple times to about this price point, which is very funny that it's now a kind of above or below. I want to draw below because I see that it goes over here, and I see it go over there. I see it touch here. I see it try to get through there again a little bit. I see it here touch again, and here weird things happen. But I would draw it somewhere here, I would say. But yeah, I would draw this still green because, well, right now it's above, but yeah, it's a little bit of a hard point to just grab. I mean, it's not a very strong line. I mean, went through it 1, 2, 3 times, but it does have a couple of points that it touched, so it is a nice price to keep in mind. So for example, I expect this, because it went up a lot, that it's gonna try to test this price level, and that if it goes down, then it probably will go down to this price point again, or something like that, or maybe halfway something. Usually halfway is also a place. Like, you can draw a lot of lines, as already said, but yeah, is a little bit longer term, if it goes through it far enough, then I would think that it would also just go down all the way to 85 again. And, well, if it tests and then probably goes up to the next, well, support or resistance line that I think is pretty major. And if not, then it says something about the strength of the momentum. So yeah, I can draw some over here. But again, I find it very hard to draw one over here. Although the price of $100 is a very nice round price point. So I do really want to draw this. I already drew like my complete own indication and stuff, but it's in another save. But this one, yeah, you can basically draw it somewhere over here. So yeah, touch there a little bit, touch there a little bit. It's just like the previous, it touches everywhere a little bit. So yeah, it's a little bit of a weak line, but I like the idea that it's $100. So yeah, it's good to know. I'm just also going to press on it, and I can go to settings, and I can really set this on exactly 100. Visibility, I don't know what that means actually. Oh, that's the bar. Oh, that's basically, no, it doesn't really matter. But now it's exactly at 100. And that's good to know, because 100 is a very nice round number, and dollars are usually the currency that most of the people trade in. So yeah, it's good to know that at least if it's 92, it probably will go to the 100, somewhere around there. As you can see, it's a little bit like here stops, here it goes through a little bit, but it stops though. Yeah, it goes through it a lot, so it's pretty weak still. But yeah, you can draw a lot of these lines. I'm gonna draw a couple more. Of course, we're gonna do the all-time high. And I forgot to make this red. Like that. Oh, did I do Alt-H? That was not what I want. Alt-J. There we go. This one is stronger. And I say that because this is the local all-time high. Local all-time highs are usually very strong points to go back to, because if this rises up again, it'll pretty much for sure try to test this and will go down for a little bit. So that's good to know, because if it goes through, then you know the momentum is either super high or it's overinflated and it will go higher and then extremely far down back because it's just super hyped. So yeah, I draw that one. I probably draw this one as well. This is a little weaker. And I might, yeah, I draw a lot of them just to like make channels basically. And you see that they're almost evenly spaced. But this is on logarithmic scale. If I do it like this, they're not very equally scaled anymore. But yeah, these are kind of channels that you can imagine maybe. So for example, yeah, here you see that it broke through the bottom of this channel and went totally through this channel. So yeah, that can happen, of course. Then the momentum is big enough to just go through. You can also see it in the volume that there was a rise in volume. And usually a rise in volume means there's momentum. And then you see a little bit of stability over here. So it tests it though. It goes down. This one is strong. As you can see, it went down instantly, went back up. Yeah, it did go up and down a little bit, but didn't get close to this anymore, so I'm not really bothered by it. And it went back up, and it went back through. And as you can see, it needed a big candle to go through it. And there's some stability over here on top of this line. Or well, yeah, volatility, but yeah, it's kind of a stability because the price kind of stays the same. And then it went up. And then actually this momentum was big enough, even though the volume isn't that big, the momentum... Oh, this is a very good example, by the way, of not a low volume, but a big difference. This was what I was talking about. That's very nice. Because, yeah, you can see that it went from 86 to 92 with not a lot of volume, which means that a lot of people are willing to buy it and not a lot of people were willing to sell it. Because if you have something like, let's see, yeah, where can I see something? You have like these kinds of things. These are candles that are smaller but have a larger volume. That means that there's more people also wanting to sell and buy up and down the whole time. So if you go like in a shorter time frame, you will see this go up very much. And here, if you go to lower time frame, it might just go up like you will see this go up. So yeah, that's good to know. This is a very nice candle. And you can see that it also corrected a little bit, but still there was a lot of momentum. And now it's up here. And yeah, I hoped that this formerly seen as a support, which can also be still the resistance, because some people might draw it over here, but I draw it like a support. I hope that in this area it would just go up, and if not, then it might just correct again to probably like 85, and that's a little bit how you can already do your basic predictions. And you always have to, that's what I recommend. You always have to have your best case scenario, your worst case scenario, and something in between. And what you can draw with, and you can of course explore on your own, but I usually go to the brushes and then click on the little thing on the side to get more options, and then I go to path. So what I usually like to do is, like, it's now over here. What I can do is go down again, and if I press, then I can just make the thing longer. And doesn't matter how long it especially is, it doesn't have to follow exactly my thing, but yeah, this is a bit what I believe that the thing is gonna do. So it's going down a little bit, probably like about there. Oh wait, so I drew it a little bit wrong. So it starts over there and go down to probably about here, because yeah, there's a little bit of stability over there. So probably do about there, and probably wants to go back up, or not, it can go even down. But yeah, this is like the worst case scenario. if we want to try to make money, of course, and then goes like that, and then yeah, you can imagine this is kind of a bearish trend. So this is your bearish trend, but the other way which it can go is that it goes up, probably to about there, because there's a bit of stability over there, and usually in short term people are also looking at stability points. So probably like there, and then it would test at same level, and then it might want to go up again or go into a channel, which you can also have, but I'm just going to be bullish here and going to say it's going up. So these are two, well, symmetrical things that can happen, because again, you don't know what you don't know what way it's going to go. But what I do know is, because it's getting stable over here, I have a feeling that soon it's going to break out to one of the two ways. And it might also be a little bit more stable for maybe a couple more days, maybe a day or something. But I believe that it might go one of the two ways. It doesn't mean that this happens in a day, but I believe that this is going to happen in the short term. And it can also just go up and down, up and down, and up and down, and up and down. But eventually this is the same thing. It either wants to test this one and wants to test this one, and time will tell which one is more likely. If it goes up here, then this one is getting less likely. If it goes up to basically here, then this one is way less likely. But if it goes down all the way to here, then this is way less likely. So you can look a little bit like that. I like to do that because I'm a little bit of a statistician. So yeah, I like to draw it like this. And you can see I drew all of my support lines. What you also might want to do is go to a longer period. As you can see, you can now see time ranges of, well, for example, I'm even going to week, because then I can get a better view of it. You can see I drew a lot of lines here, but there's a lot of lines that you can still draw. So for example, this one is the all-time high ever. I'm just gonna draw a big resistance line over there, and this is an all-time low, for example. All-time low somewhere over here. I'm gonna draw another support line, and you can do this, of course, and draw huge amounts of them. I like this level a lot because there's a little bit of stability above it, and then it broke out, and then it uses it as a resistance line here, and then here it's also being used as a support line. So this level is also pretty important in my opinion. So this is a nice support line. And this is, of course, to keep your options open, that, like, for example, on the long term it goes up like totally to here. That this is probably a nice big line that it wants to go back to. This is probably a nice big line that it wants to go back to, like this size. But also this is a very nice line that it wants to go back to. And this is the $50 line which I was talking about. And that way you have a little bit of those long-term price points that are very interesting. Like, for example, this one I now corrected it to local stuff, but you can see it's been there for a time. I can even draw this. Why not? I'm just gonna draw that. Oh, which one did I change? Oh, I want to change this one, like that. So yeah, that's how you do your resistance and support lines. And these can tell you a lot about what it might do. So for example, if it broke through the all-time high, which is not going to happen pretty soon, I think, might be happening, but I don't know. Then you know at least after the 128 mark, there's another mark, the 140 mark, which is kind of the old top of this one, which is also probably going to be used as a resistance line there. Or, well, a resistance point. So yeah, that's what I do. I'm going back to here it's very nice to see. You see this extreme bullish trend. Then you see this smaller body with a larger wicks, which means there's a correction. Then you see it go down, and then you see that it's getting stable for a little bit, which means that either it's going to do something like this, or it's going to do something like that. Or it can do something like that, of course, which I don't hope, but I also don't think, because there's still a lot of volume still in the market, and a lot of volume, like this happens a lot when there's not a lot of volume, yeah, of course, or it's super inflated, which it is a kind of, because this is very inflated. Yeah, as I'm saying, I'm still, oh, that was not what I wanted. I'm still learning as well. No, I'm gonna put it on the 4 hours again. This is very nice. What you can do, for example, if you have all these resistance lines and you are scared for moving them, then you can just lock them all. So I don't know if I can shift click everything. No. Can I control click? Yeah, I can control click. That's very nice, because then I can just bloop, lock them all at the same time. And now I cannot move them, which is very nice. So these arrows, yeah, I can keep them in. But I know what's gonna happen. So I'm gonna remove them for the next video. But yeah, this is basically a little bit of an introduction to your resistance and support lines, which are one of the most basic indicators that you can make for yourself to understand the graph more. And of course they don't work all of the time, but again, as I said in the last video, all the indicators combined make your opinion or your response. So I already told you about the candles, which I kind of used already a lot in this video. As you can see, I'm using candles a lot to also make the decisions, which I'm not going to act on because I'm just in there already. Yeah, the resistance and support lines are also an indication of, well, how far might it grow or how low might it go. So yeah, I'm very curious. I hope you enjoyed. If you liked the video, please leave a like. If you have anything to suggest or you have a very strong opinion about something, please let me know. I'm always open to suggestions or opinions. And yeah, if you want to see more of this, be sure to subscribe. I'm also planning already a third episode where I'm talking about more indicators. So for example, we're going to talk about the MACD indicator, about the Bollinger Bands. I usually forget the name of it. I think it's the Bollinger Bands. Yeah, you have some others, which are squeeze momentum indicators, which are basically combination. We are definitely going to talk about simple moving averages and exponential moving averages. And we're going to introduce another very basic indicator called wedges. So yeah, be sure to subscribe if you want to see that video. And yeah, this one is already getting long, so I'm going to cut it short. Thank you for listening. And as I like to say, good morning, good afternoon, good evening, or good night.